U.S. stock markets are officially open for trade. Joining me now is Hardika Singh, economic strategist at Fundstrat. Hardika, welcome to the show.
Thank you so much. So great to be here.
Okay, so government shutdown has ended. What impact do you think this is going to have on the markets?
Right. So now we have to start thinking about what's next for markets here. Congressional Budget Office, it estimates that the shutdown shaved off about 1 to 2 percentage points from real annualized GDP growth in the fourth quarter, but most of that will be recovered. So I'm not too worried about that. What I'm more focused on right now is how it has potentially intensified this K-shaped economy that we've been seeing recently. This gap between higher income consumers and lower income consumers, it just seems to have widened even more. So for right now, if you are among those people who own stocks and have significant stock market wealth, you are reporting an increased improvement in sentiment, about 11%. According to the University of Michigan survey. But if you are on the lower or middle income spectrum, you probably don't have stocks as much and you probably don't feel as great. And a lot of these people are also on SNAP. With these SNAP benefits on pause, we're seeing commentary from McDonald's and Tyson's that indicates that this segment is really coming under a lot of stress right now, which isn't great because SNAP, it's a big contributor to the economy in some ways. It accounts for about 10 to 12% of food at home spending, such as groceries. So it's never good to see that. But I do think that at the end of the day, this is just another test for the stock market. In the past few years, we've seen it successfully pass so many tests. We've had COVID, inflation, higher interest rates, tariffs. I think this recovery from shutdown is just going to be another test that the stock market will pass. And I do think we're going to keep pushing above 7,000 points by year end.
And you did mention the GDP being impacted by the government shutdown. How long do you think that will take to recover?
I think it's hard to say. A lot of it takes a while to normalize. I do think that what helps right now is that we have this exuberant tech market rally, and these tech stocks are really leading the way. And I also think that it's healthy. We aren't seeing just like a handful of stocks at the top lead the way. Chip stocks have really diversified in the rally. So right now, what's interesting to me is that AMD shares are really lapping NVIDIA's, especially yesterday after its analyst day. AMD shares really just outperformed NVIDIA by a lot. That was a little surprising to me because on its analyst day, we didn't get that much new and exciting information that the company shared with investors and analysts. So I think that this is a healthy thing for the market because at the end of the day, if you believe that AI is a multi-year secular bull cycle, which I do think it is, you want to see certain stocks rotate to the top from time to time, right? And it's also healthy to see that, even stocks like NVIDIA can get a reality check no matter how big they are. I think I saw the stat that, NVIDIA's market cap right now is $5 trillion, which is worth the GDP of almost every country on globe except United States and China. That's just a crazy amount, right? So I do think that it's healthy that even these chip darlings get a reality check. And I think that at the end of the day, this remains a bull cycle for tech stocks.
And I know you mentioned a K-shaped economy. For our viewers, can you explain what that is and your take on it?
For the past few years, what we've really seen is that higher income consumers have continued to lead the economy, even though we've seen weakness in the lower and middle income consumers. So if you listen to earnings for food companies, which is a great representative of what's going on in the consumer space, you hear that consumers are pulling away from non-food categories. They're shifting to more food-related things. Or if they're buying items, they're not buying the brand name, they're buying the store name products. So little things like that indicate that, they are having a hard time influencing what's going on in the economy. Whereas if you look at higher income consumers, especially the top earners, they're the ones leading the way. And it's kind of like when you think about diversification. You want to see the economy being run by a large group of consumers, not just one group, because it leads the economy vulnerable to a pullback. I don't think that's the case yet because these top income consumers, they continue to be very, very strong, but there's always that risk. And I think that's a risk that we have to keep pushing through.
All right, thank you, Hardika Singh, economic strategist at Fundstrat. Thank you so much for joining us at the New York Stock Exchange.
Thank you.